look at Apple. Apple's been at a very important juncture, but I think we need to take a bit of a step back and zoom out on the chart to really give us that perspective that we need. So let's have a quick look at this. And what we're looking at here, I know a lot of people look at so-called daily charts, but I really like to get my perspective on the weekly chart. So it's very simply, you just literally make your daily time frame a weekly time frame. If you don't know how to do that, you just go into your charting tool and switch your daily charts to weekly. So each bar or each point is 1 week, and it gives you a lot more perspective. So for example, here we're looking at Apple, and what I really want to focus on for a minute is that yellow line. And if you look at that yellow line, you can see that we are currently kind of teetering and dancing on that line, and the more weight and the longer it takes to kind of break through it, or I guess the more weight it puts on it, the longer it holds above it, and kind of just above it and just on it, the more ultimately the weight leads to a break below there. And you can see the last time we dipped below it was really just for literally 1 week during the COVID breakdown. And before then, we were going back above it, so that's a different circumstance. But we really haven't broken below there since March 2020, and again, more meaningfully, since basically late 2018. So it's a long time since we've been able to sustain above that line. I think we are going to break below it sooner rather than later. And again, I just want to kind of show you this chart. So a big thing is to just zoom out to give you more perspective, particularly in a market like this, which is a lot choppier. Now, I did add another chart here, and that is the 200-week moving average. So we have the 50-week moving average in yellow and the 200-week moving average in red. I'm not saying necessarily we're going to go down there, but I do want to give you a long-term perspective. And you can see over the years, we have ultimately always gravitated back down towards that moving average. Whether that was back in 2012, where the corrective move was about 43%, or whether it was in 2015, in 2016, where the corrective move was about 32%. Or then, of course, in 2018, we had another 40%-ish. COVID, again, we said that's a much quicker one. That too was 35%. So far, Apple's only down about 16%. So we could possibly see about twice that move if and when we were to break below that yellow moving average. I do think it's more a matter of time. It's a question of when, not so much if.